Are you a first-time home buyer or are you a member of the Heroes program? Then this is a video for you. My name's Sandy Hodkin and I'm a real estate agent here in Cocoa Beach, Florida with Remax Aerospace. Today we've invited Sam from Loan Depot and he's going to talk to you about First-Time Home Buyers Program and the Heroes Program. So if you are a member of those groups, might be something you want to listen to. Welcome, Sam.
Hey, I'm Sam Waits with Loan Depot. I've been in the mortgage industry for about 7 years, if you don't count my time at Chase Bank. I help all kinds of borrowers, but I'm also a new home buyer specialist. So if you're a first-time home buyer, then I've got a lot of programs and a lot of stuff that's good information for you.
So we're just going to go through a couple of questions and then Sam's going to answer them to the best of his knowledge and then we'll see where we end up. So in my intro, I also said that we would talk a little bit about the Home Heroes program. So we'll discuss that at the end. When you have a first-time home buyer, what is it that you're going to be looking for first of all? How do we qualify as a first-time home buyer?
Most first-time home buyers are going to want to probably start by finding out what their credit is. So there's lots of free applications online, like Credit Karma and stuff like that. If you don't know what your credit is, I would go ahead and maybe download one of those applications, and just that way you can get a good idea. And then the second step would be to speak with your local lender. So I wouldn't try to figure it all out on your own. Your local lender knows the programs, especially if they're offering, to make sure that they offer these programs and that they're a first-time home buyer specialist. But go ahead and talk with them, and then once you know your credit and everything, it'll kind of save you a lot of time, kind of figure out where you need to go from there.
Once you've had your credit all figured out, there are lots of other things that you need to consider. So, once you get a price point from Sam, then you come back to me and say, hey, this is the range that we can buy in, but we don't want to be house poor, so maybe we want to work a little bit lower than that. Or you say, well, we have a bit of extra cash in the bank, and so we can actually afford to do a little bit higher than that. So once we get that kind of guidelines, then it's my job to help you find the home. Obviously, when you're a first-time home buyer, you're going to have lots and lots of questions, and it is okay to ask questions. That's why we're here. So Sam, he has a lot of questions that he has put together that most people ask, and then there are questions that they ask me too. So we'll have Sam just answer a few of the most frequent questions that he gets asked, and we'll go from there.
So I'd say the first one is, what qualifies as a first-time home buyer? And the answer is not necessarily what you would expect, because there are some people you think would qualify that don't, and some people that qualify that you wouldn't think that do. So the way that Fannie Mae and Freddie Mac consider a first-time home buyer, which pretty much goes with all the other programs as well, is if you've owned a home in the last 3 years. So that means if you've held title at all, even if you're on like a parent's title or something like that, you on a piece of land that had a home on it up in a different state that you don't really have anything to do with, well, you could still not be considered a first-time home buyer because of that. Or if you've owned homes in the past, but you just haven't owned one in the last 3 years, then you're considered a first-time home buyer again. Another one is, how do I find a lender that does first-time home buyer programs? I would actually ask your real estate agent if you're working with one. They tend to have a very good hold on that. I wouldn't just go with your bank or something like that. Most banks don't offer any first-time home buyer programs, or if they do, or like wherever it is that you bank, if they do or offer them, they might not offer all of them. They might offer only a few. They might only offer like the Home Ready, Home Possible programs, which are 3% down programs. They might not have like the bond programs or the Hometown Heroes program or all those different things. And it's going to be really area specific too. So the national banks kind of they do like all kinds of stuff in the whole country, whereas a local lender will have all the stuff that's for that area. So you want to probably use a local lender, ask your agent, and they'll be able to help you out with that.
Okay, so you mentioned that there are programs where they get assistance. And so tell me a little bit about that. So in the past, we've been given $15,000 and then sometimes it's only just 10. So there are different programs that you can qualify, and basically it's free money. We don't like to say free because you always think, oh gosh, I've got to pay it back, but you don't necessarily. So there are these bond programs. So tell us a little bit about that.
Yeah, so the other question is how much money do I need to put down? Some people still think you need to put 20% down, and you don't. It can be anywhere between 5 and 0%, depending on what your situation is. Um, so there's a Hometown Heroes program, for example, where you get a second lien for up to I believe 25,000, depending on the loan amount, um, and that's not free money you have to pay back, but you don't have to pay interest on it and you don't have any payments on it. So it's just kind of there. It helps you with the closing costs. There are some grant programs, although they're sometimes they're harder to qualify for that you don't have to pay back. Sometimes they have higher rates because of that. It just kind of depends. So there's all sorts of things just in the middle, and the only way I can't possibly go through all of them,
Right.
but the best way to do that is to have a discussion with your lender that has all those programs, and then to have them help you figure out what you qualify for. So that's going to be the number one thing. So there's income limits on some programs, so you can't make too much money on certain programs. Um, you know, there's asset requirements. Sometimes there's down payment requirements. It just depends on what your situation is.
So when you say that you have to pay it back with the Heroes program, you're actually referring to paying it back when you sell, or are you saying that you have to pay back each month, that you have to pay the extra money?
So I haven't had anyone pay one of those off yet because it's so new.
Okay.
So I haven't seen it in practice, but my understanding is that either if you refinance or if you sell the house, then you'll have to pay off that second lien. So basically, when you sell the house, most likely, or if you refinance, I guess rates are kind of high right now, so you might end up refinancing. If that's the case, then you'll probably have to pay that lien back. But presumably, you could refinance it into the next loan, depending on if you have the equity to do that.
We talk a lot about your credit. So is there a minimum, a maximum of credit that you actually have to have?
So it's a little bit different for each person. Generally, the better the credit, then the more options that you're going to have. Certain programs have credit requirements, some of them as high as 680. So, but there's other programs where you don't have to have anything higher than maybe 620, and you're not necessarily out of all programs even with a 500 credit score. It's
Okay.
just a little bit harder to qualify. You're going to have basically the better terms, the better credit that's offered. It's all going to depend on what sort of income that you have, what your debt to income looks like when we look at it, compared and what assets you have available to put towards a transaction. So it's kind of like a whole picture.
Okay.
For example, with FHA, you can actually I haven't seen one that worked in a long time, but you can actually do an FHA loan with 500 credit score
Okay.
if you put 10% down. Um, so I haven't seen one that worked in a while. Even with that, there's a good chance that it's not going to work, but it can. So
So, a lot of times people ask me, my credit's not great. So, there are little ways that you can increase your credit score very quickly. One of them is obviously a prepaid credit card from your bank that can give you some instant credit. Another good source is a gas credit card if you can. And make sure that you pay it off every month and just use it, but make sure you pay it off. So they can give you a quick sort of leap um, to your credit score so that if you are very close to the requirement, this could just help you get to that next stage.
yeah, there's a lot of. I would have a discussion with your lender about your credit. Um, I wouldn't necessarily start opening up accounts before you just have that discussion with them because it may not get you to where you want to be in at that time. And if you have a lot of work to do, then you might end up getting referred to a third party company that helps rebuild credit for mortgages. I wouldn't try to find it on your own because you want to be working with one that's specifically for mortgage credit. So mortgage credit score is different from the credit score that you use for your car. It's different from the credit score that you use for your credit cards. So, like for example, I say to check Credit Karma, but that score that you have is not going to be exactly the same. But it does give you a good idea where you're going to be.
And then a lot of other people think, oh, I've got some debt, and so I need to pay off all my debt. And that again is a bit of a myth because, again, Sam can tell you that not all debt is bad debt. And so sometimes it's not ideal to pay off everything because they want to show different ways of you working your way through your bills and stuff.
Yeah, if you pay off all your debt, or if you pay off certain accounts ahead of time, sometimes that can actually hurt your credit. And then we're in a tougher situation. Go ahead, go with start with what you have, and then once the lender is able to take a look at it, they'll let you know if something's going to be once if they want to have something paid off during the process of the loan if you can do that, and they might even have it be paid off as part of the loan. That's done all the time because if you pay it off as part of the loan, then it doesn't affect the credit, but it also removes the liability from the account in order to get you qualified for the product. So definitely just before you make any huge money movements or anything like that, talk with a lender.
And don't buy anything new. That's very important
Yeah,
too.
don't buy anything. Don't
don't
buy anything
open.
new.
Don't
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 pay
buy a
anything off.
car. Don't buy a car
Don't
and on credit
don't
and
take a whole bunch of cash from somewhere and put it into a bank account. Don't do any of that stuff. Have a discussion with your lender first about everything that's going on in your financial situation first.
So everybody who is trying to get a mortgage has obviously been watching the rates, and they're going up and down. And so what you might have been able to qualify for last year may be very different from this year. And so Sam can talk to you a little bit about the rates and what they really mean.
So the rates are definitely quite a lot higher than they were even 6 months ago.
Right.
Right now, conventional rates at 7% for a 30-year fixed. If it's a perfect loan, perfect situation, maybe 25% down. That's obviously a lot higher than it was a few months ago, and like a year ago, you were in rates that were like 2.8. So that means the mortgage payment for a lot of properties has pretty much doubled. So what you can qualify for might be a lot less than it was before. Good news is that we expect the rates to go down within about a year. So if you get something now, you should be able to refinance at that point. I don't have a crystal ball, I can't guarantee anything, but we do expect the rates to come down later, and you should have some relief at that point. And even if something were to happen with the properties, the market or whatever, that they have HARP, which allow people to refinance even when they're underwater. And so you would see that even if you're underwater, your payment might go down if you were able to refinance. We're not really expecting that so much in this market where we are, just because of where we're located, but that could happen more nationally for sure.
Another question we get asked quite a bit actually is how long do I have to be employed to qualify for any of these programs?
So it's really going to depend a lot on your situation, especially like the type of job that you have. If you are, let's say you're a recent college graduate and you just got an offer letter for a company and you haven't even started there yet, I can actually, if it's a strong enough offer letter, we can actually close before you've even started on the job. So like before you've even started is possible, but it depends on your situation. So I would say like what takes the longest tends to be if you're self-employed. Sometimes you need more than 2 years doing that because they need to have 2 years of tax returns in order to qualify. So anywhere between that, um, I wouldn't count yourself out just because you haven't been working in a job for very long. Talk with your lender first, and then we can have a conversation, figure out how long you need to be at that position before you have it.
So, one of the things that I get asked or I observe is mistakes. There are mistakes when you go through this program, and a lot of it is to do with the lender you choose. Um, a lot of companies now, and a lot of agents, and a lot of properties here are asking for local lenders, and they're asking for local lenders for a reason.
Yeah. So I mean, we discussed some of the mistakes, like buying a whole bunch of like buying a new car or something right before you get a mortgage, or moving a bunch of money around. But the biggest one tends to be the lender that they start off with. What a lot of people do as first-time home buyers is they just go into their local bank, the one that or they're not their necessarily local bank, but wherever they have their bank accounts, and they start there. And the issue is that, especially if you're a first-time home buyer, they don't normally have access to most of those first-time home buyer programs, and they may not even know about them. So you end up being restricted to certain programs that may not be the best option for you. And it can be a huge cost difference between one product that's the right product for you and one product that is, whatever the bank happened to have available to you. And then another issue is that a lot of customers tend to go online and they'll look for like the lowest rate that they can find. Well, choosing the lowest rate that you can find is not necessarily the best option. A lot of these lenders are not local in any way, and they don't have a local reputation. They don't care whether or not your transaction actually closes. And I can tell you right now, losing out on a house because you were going to save $20 a month on the interest rate is a lot more expensive than whatever you're going to save. Um, it's a huge deal. And a lot of, you might not even get you might even get your contract accepted. If you do get your contract accepted, you could have an issue. But because a lot of the selling agents are looking for local agents that have or local lenders that have a good reputation, sometimes I mean I've seen offers that are higher, $10,000 higher than one other offer get accepted or get thrown out just because they're with like the wrong big name bank, for example. So.
So another little quirk to all of this is people talk about cash. How much cash do I need? Where do I get the cash from? Do I have cash under my mattress and I'm going to use that as my down deposit? All these things are not necessarily a good thing because Sam will tell you all the cash has to be seasoned. And what does that mean?
So cash is an issue on federally regulated things, and government or mortgages are one of those things. Basically, when we get your assets, we have to get the last 2 months bank statements, and if there's a deposit on those bank statements that's over a certain amount, they're going to look at it, and that amount is not very high. And if they look at it and it looks like it's cash, it turns out to be cash when they get the deposit slip. That doesn't count towards your assets, so you can't use that for the mortgage transaction. That can be an issue if you're expecting to use it for the mortgage transaction. So you got to be very careful with cash. It has to be seasoned for at least, I would say, 2.5, 3 months, depending on the situation. Have a discussion with your lender about it. It always goes back to having a discussion with your lender. And some lenders may not even, especially like the banks and stuff like that, they may not even bring this up or find out where your money's coming from before you enter up a mortgage transaction. You could be halfway through a deal and then they find out that that's cash and all of a sudden you're declined. So always in that happens with your when you're shopping with those whoever's like the cut rate mortgage people online too. So we kind of look at it as going to like going to buy a car or let's say you're trying to buy a taxi to your wedding and it's like 2 hours away and you have an option between the limo that you is guaranteed to get you there and it's nice and it's gonna you don't have to worry about it, or you save $20 and you get the taxi that's got like 300,000 miles on it and they've never changed the oil and like the tires have like patches and stuff like that, and just kind of cross your fingers and hope that you actually get there on time. Like you probably take the limo for the extra like small amount.
It's called peace of mind.
Right,
Peace of mind.
right.
And we also have family members who give you gifts. And this is something that's okay. You can have gifts as long as we can prove where it comes from. So if mum and dad say, hey, we're going to give you $5,000 towards your down deposit or your first home or something in that nature, then we have to show where it comes from. So mum and dad have to show that it came from their bank account. It came from their bank account. It went in a check to your bank account, and we can prove all of this. So it's okay to get gifts, and they can give you a lot of money if they like. They can give you.
Yeah, limits are much higher than you'd expect.
So I mean, I think
Talk to an accountant
right.
about if they are giving out a lot of money, make sure that it's you can and you guys can discuss that part of it. But the limits without having to worry about it at all or any taxes are quite higher than you or a little bit higher than you might think. And talk with your lender about it, and we can help you discuss how to source those funds. Again, cash, if they're just depositing cash into their account and then giving it to you, that can be an issue depending on the program that you're using. So keep that in mind.
Another big red flag is you are buying a home and you've gone through a lot of the process and everything, and then you decide to quit your job or you move to another job. Well, that is really going to put up a lot of red flags, and it means that we probably are not going to close on time and we might have to go through a lot of the process again. Now, if you are in a job when we start and then you've got a new job and you've got a letter and the new job says, I'm going to pay Sam $150,000 a year and he's going to work at SpaceX, and that's great. So if we have that, then that's a different scenario. But if you just say, oh, I'm fed up of my job, I'm going to quit, then you may not get the house.
Whatever you're doing, discuss it with your lender up front and don't try to hide anything because they're going to find out. They will check right around the time that you're closing with your employer to make sure that you still have that job and that you're still going to keep that job and you're not planning to leave. So I mean, I've had some situations where like an engineer or something was planning to take a promotion and they didn't mention it because they thought that they could hide that, and they put in like an end date. They had already put in for like when they're resigning into the system, and so when we called in to check, to verify that they're still working there, it said, yeah, they're still working here, but they're leaving like 3 days after you close. That can be that's an issue because they need to show continuity for about 3 years. So that doesn't necessarily mean everyone's keeping their job for 3 years, but they need to be expecting to keep
So
it for 3 years.
they are expecting you to pay back the money, and that's the thing they're looking for. They want to make sure that you do have a job and that you are going to make this commitment, because you do sign to say, I will pay this money back, and they want to make sure that you can have that
Right.
opportunity.
And what ended up happening with that is that um, he was just taking another job with another company, which was fine. We just needed to now we had to go document all that stuff and get his offer letter and stuff like that, and it delayed the process when it didn't need to. So
As I told you, that we're in Cocoa Beach, Brevard County, and so we've just gone through a hurricane. Ended up being less than a hurricane, really. Ended up being a very severe storm, but we did have quite a bit of damage from the rain and the wind. So Sam is going to tell you a little bit about a program that he may be able to help you with.
so this is more for the people who are on the other side of the state who lost their homes over it. But there is an FHA program that we offer that allows you, if you were a victim and you lost your home, to get a FHA loan for 0% down. So that's a big deal. You can't get an FHA loan for 0% down otherwise. It doesn't require them to get a home back in the place that the home was destroyed. You can get a home anywhere. So anyone who's had a situation over there with being devastated that side of the state, if you're looking to move anywhere around the state, we have that program for you. If you want to move here in Brevard County, we have that program for you. You can get a 0% down FHA loan. The FHA limit is over 400,000, 450 in that $450,000 range right now. So that'll cover a lot of people. So if you have any questions about that, reach out to me.
Like this, does this apply if you were renting before?
It does.
Okay.
If you were renting and you lost your home because of that, we can document that, and we can document that the home was destroyed basically, and that the landlord has to let you out of the lease. You can get a 0% program and to buy a home. So there's a big opportunity for those that didn't own before to now
Yeah,
to
to
own
have
if they were a victim of the storm.
And so, how does that work, with a job? So, you say you're in Fort Myers and you lost your home. So, you get 0% FHA, but do we have to have a job to go to? Are we moving to Brevard, Cocoa Beach area? Job,
It
right?
depends on your situation, but there is, I believe, some provisions for the storm that
Okay.
make it a little bit easier. There's a lot of documentation, a lot of restrictions that you would normally have for a normal loan that are loosened up and not a little bit easier to qualify for than normal. So yeah, that's a good question, but it's going to depend on the person. So
So we're going to just touch a little bit about the Heroes program, just because this is a very new program, and there are surprisingly a number of people who actually qualify for this program. I am going to download a flyer at the end of this video so that you can have a look to see if you qualify for this program, because it's not just the firemen, the policemen, the doctors, the nurses. There are some other people that do qualify, which might be surprising to the majority of people. So we're not going to really talk about it so much because it's
there's
a
so
little
many
bit,
people on that
there's
list.
so many people on the list, but I am going to download that at the end. So I hope that you've enjoyed our Lunch and Learn. Sam, thank you for coming and being with me today. If you'd like to say a few words, I will put all Sam's contact information at the end of the video too, and hopefully you'll give us an opportunity to help you in the future.